Hello everyone, welcome to a new video. Today I will be analyzing the company of Oatly, which if everything goes as planned, it should be going public this upcoming Wednesday, May 19th, 2021 in the NASDAQ under the ticker symbol OTLY. As always, my aim with this video will be to hopefully create a good enough picture of the company based on the S1 filing, and then if you are interested and you think that potentially it could be a good opportunity of investment, then you can go ahead and do your own due diligence. Let me first though highlight the main points that I will be covering in today's video. So first of all, I will give an introduction to the company and we will also look at some general metrics. Afterwards, we will also look at the industry potential, followed as always by the financials. And this time I will not be comparing it with any other competitors, the numbers and so on, because yes, they have competitors, but they are mostly food giants that are very diversified and they don't only produce oat milk products like the case of Oatly. So I feel like the comparison would not be relevant, or it would be very hard to compare that exact same niche to Oatly. So that's why this time I will be omitting this part. Following this, we will also check the IPO price and valuation. And finally, as always, I will give my personal opinion on the company and also my future plans with it. With that said though, and after I remind you that if you enjoyed the video, it would be super awesome if you could give it a like. Let's go for it. Oatly is, according to the S1 filing, the world's largest oat milk company, which was founded in 1990 in Sweden. And yes, this is a Swedish company with headquarters in Malmö, Sweden, with around 800 employees currently. However, although the company has existed since 1990, it was only until they did the whole rebrand during 2013 and 14 that the company really took off. In that year, they started with the Nordic countries of Europe, then in 2016 they relaunched in the UK, in 2018 in Germany, they also entered the US in 2017 and in 2018 in China. At the moment, they are present in several other countries and entering the markets of Italy, France and Spain, but as we will see later on, most of its revenues are very concentrated in very few countries, which are mostly the ones that I mentioned previously. And summarizing this whole part, they are basically in high growth mode, and we will basically see this when we go into the financials. Going into the products, as I already briefly mentioned, they focus and they only produce oat milk related ones, like for instance milk, yogurts, desserts, ready-to-goes and prepared to cook. And they focus a lot on sustainability. I think it's something that probably you watching already know, but essentially plant-based products are much more sustainable than the ones coming from, let's say, meat or other sources. And more concretely, 1 liter of Oatly milk produces 80% less greenhouse gas emissions, uses 79% less land, and also consumes 60% less energy than a liter of cow's milk. Currently, they have around 60,000 retail partners and around 32,200 coffee shops which are selling their products. And maybe here it's good to briefly clarify what exactly they partner with. So in terms of retail stores, they have partnerships, for instance, with Tesco or Target, so very big chains of supermarkets. Then in terms of coffee shops, they have also partnered with some franchises from Starbucks, as well as other individual coffee shops, and then they also distribute their products through online e-commerce stores, like for instance in the case of China with Alibaba Tmall. Essentially, the strategy that they follow when entering new markets is to partner first of all with coffee shops, that they start distributing their products and people start knowing about them, and once this is already in place, they usually go then and enter also the retail space. Actually, I will comment a bit more on that later on, but they operate a very similar business model to that of Beyond Meat. Of course, the product is different, but they both operate within the plant-based food industry. Finally, before we get into the numbers regarding the industry, the company currently has 4 factories that they own, and they are building 3 more because, as they clearly state in their S1 filing, the demand is clearly outpacing the supply and they simply cannot produce enough to fulfill all the demand that they are having. Which is of course a good thing, of course. And not only they operate their own factories, but they also have co-manufacturing partnerships with other companies to help them drive this growth and fulfill this demand that they are not able to fulfill just with their own factories. And something that also clearly illustrates that their products are selling well is the velocity at which these are sold in the stores, which has increased with respect to the previous year in all markets. Let's talk now about the industry that they are in. Firstly, they are a clear player within the global dairy industry, and that is projected to grow from $592 billion in 2020 to $789 billion in 2025, representing a compound annual growth rate of 5.9%. Within specifically the milk category, this is expected to grow even more at a compound annual growth rate of 6.6% until 2025. Focusing on the plant-based milk market, and sorry for the quality of the picture, but it seems to be a tradition for companies when preparing S1 filings to put the pictures with the worst quality possible. But yeah, nevertheless, in it you can see two things. Firstly, the percentage of the total plant-based milk market that oat milk in general represents, which you can see that in the UK it is of 42%, in Germany of 60%, and in the US of 14%. And secondly, you can also see that Oatly has a very large market share within these markets. In the UK, around half of the total oat milk market is contributed by Oatly. In Germany, this is of 43%, and in the US of 13%. Also, in this other picture, you have the trend that the different types of milk have followed over the past 3 years. Not sure if you can see it correctly, but it compares oat milk versus soy and almond for the 4 countries displayed. For Sweden, oat is the largest plant-based milk consumed, and the same for the UK and Germany, which are also following a positive trend. In the United States, though, the most popular milk is the almond one, but oat is the only one following a positive trend, as the other two seem to be decreasing, which I also see it as a good thing. Just looking at what I just shared right now, I think that it's pretty clear that the outlook for the industry moving forward is very positive. But after this, I would like to now go over some numbers, and we will start with the income statement. Firstly, checking the revenues, during the past year, 2020, they reported $421 million, which represented an increase of 106.5% over the previous year. Breaking this down by region, Europe, Middle East and Africa representing 64% of this, which is normal as it is their main market, followed by Americas with 24% and Asia with 13%. Then, if we split it by channel, food retail is 71% of total revenue and food service only 25%. I will discuss it later, but I think that going out of the pandemic, the food service sales should also increase significantly as more coffee shops start to reopen. Finally, the last breakdown of the revenues, which I think that it's super interesting, is by countries. And on that, we can see that its top 6 countries, which include Sweden, UK, US, Finland, Germany and China, make up almost all the revenues, more concretely 88.83%. This tells me essentially that with only these 6 countries, they are already generating all of its revenue and all of the growth. And there is so much more growth potential still ahead of them as they start expanding into new countries and penetrate even more into some other ones, like for instance China or the US. Moving down through the income statement, there is also something that is not very positive to see, which is that the gross profit has decreased by 2 percentage points, and also that they are not yet profitable, with a net loss for the past year of $60 million, showing that they are still a few years away from profitability. Going into the balance sheet, it looks very good with more than $100 million in cash and a conservative debt ratio of 51.97%. At this point of the video, it is time to look at the IPO price and valuation. Based on the information I have available right now, we have that its IPO price should range between $15 to $17 per share. And if we take the middle point of that, so $16, the amount of shares outstanding after the offering and the sales for the past year 2020, we have that it should start trading at the price to sales ratio of 22.49. This is honestly very demanding, and yes, the company is doing great, and it wouldn't surprise me if it grows next year also at 100% and the next years to come also at very high growth rates. But the thing is that, as I already mentioned previously, this is a very similar company in the sense of business model and industry and so on to Beyond Meat. Because both of them are operating within the plant-based food industry, as we just said, both of them are having incredible growth, and both of them are also facing increasing competition from large food giants like, for instance, Unilever, Kraft Heinz or other companies out there that are trying to enter this market. However, while as we just saw now, Oatly should start trading at a price to sales ratio of 22.49 times, Beyond Meat is currently trading at a price to sales ratio between 16 and 17 times. And just based on that, I think that currently it is probably a better deal to invest in Beyond Meat. As I said though, this is just the projected IPO price, but with the market how it's been lately, we need to see how it really ends up trading on IPO day. So based on this, as I said, I will most likely not be investing in Oatly, mostly because, as you know, if you have been watching other videos, I'm already invested in Beyond Meat. I feel like it's a similar player and the valuation currently of Beyond Meat is more attractive. Also, it has been publicly trading for much longer time. I think that now it will almost be 2 years. And Oatly will just start trading right now, and also the valuation that we just commented and so on. But of course, I will start to get interested in Oatly if, for instance, the price drops to $13 to $14 per share, then I might start considering to add some shares. Mostly because I really like the company. I think that the plant-based food industry in general has a lot of future potential, and Oatly seems to be a very good player also within it. Nevertheless, remember that I'm no financial advisor, that everything that I shared in this video has just been the research that I have done myself and the main highlights from what I consider relevant from the S1 filing, but you should always do your own due diligence before investing in this or any stock. With that said though, this is the end of the video. What are your thoughts on Oatly? Will you be investing in it on IPO day? How do you find the valuation? Please let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.